You got me running, shake it, shake it, shake it, baby. Raise your hands up, raise them up.
All right, good morning, everyone. Well, afternoon and evening if you guys are in a different time zone. Okay, happy Thursday. Okay, so welcome to our daily currency call, okay, whereby you get a daily dose of fundamental updates and, well, trade ideas as well, okay? So today is Thursday. So I'll be going through the Japanese yen, okay, specifically dollar yen, euro yen, and pound yen, okay? But before I get started, all right, the standard protocol. Okay, a disclaimer. Any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speaker, aka me. So please remember to do your own analysis prior to entering any trades. All right, boring stuff aside. On Tuesday, okay, the Bank of Japan actually carried out a monetary policy decision announcement, okay? And well, normally there's nothing much to talk about, okay? Because as we know, they normally will just keep rates unchanged at negative 0.1%, okay? Then, QE will remain unchanged as well, okay? Until, well, last meeting on December, okay, back in December, where they actually announced a tapering, okay, which will begin in April, all right? Yeah, just 3 more months down the road, 2 or 3 more months down the road, okay? But this time round, okay, apart from what I've just said, okay, interest rate remains unchanged and then no change in the QE plans as of now, okay? The bank's outlook report, okay, which actually is being released on a quarterly basis, actually, there are some changes, okay? Particularly, all right, let me bring you to this line over here. The year-on-year rate of change in the consumer price index, aka inflation, is likely to increase in positive territory for the time being, albeit with fluctuations on the back of a rise in energy prices, a moderate pass-through of raw material cost increases, and dissipation of the effects of a reduction in mobile phone charges. Okay, so the Bank of Japan is actually expecting inflation to stay, okay, or to increase to the positive territory. Okay, well, later on I'll show you guys the graph, and then you guys will know what's so big deal about inflation being in the positive territory. Okay, and then here comes the key point. All right, where is it? Where is it? The projected rate. Let me just do a quick search. The projected rate. Why the projected rate? Okay, over here. The projected rate of increase in the CPI for fiscal 2022 is somewhat higher, okay, mainly reflecting a rise in commodity prices and the pass-through of that rise to consumer prices. So you guys may be wondering, maybe higher, somewhat higher, how much higher, okay? So if we were to go all the way down, I'll be sharing the link to this report later on, all right? So no worries for now, just focus on this. Okay, 2021 is already over, okay? So let's just move on to 2022, okay? So 2022, the forecast for 2022 inflation, okay, back in October, all right, the Bank of Japan was actually expecting inflation to be within 0.8% to 1%, all right? However, this time around, after the revision, okay, they are actually expecting 1.0% to 1.2%, okay? That is actually an increase, which is actually a good thing, all right? And then for 2023, previously, they were expecting inflation to be between 0.9% and 1.2%. This time around, okay, they actually revised upwards as well, okay, to 1.0% to 1.3%. Okay, so overall, near-term inflation, okay, has been revised upwards, okay, which is actually a good thing, okay, but like I told the club members yesterday during the Wednesday call, okay, try not to think of inflation as a good, well, actually in general, try not to think of economic indicators as is it good or bad kind of thing, okay, because it's not as easy as just differentiating it between good or bad, okay? Because rise in inflation, right now I'm saying it's good, okay? Because it's good for, the central bank, in terms of central bank, because the central bank will be pressured to increase interest rates, okay? That may actually lead to a strengthening of the currency, okay? In this case, Japanese yen, okay? But bad because, the citizens will have to pay more, okay? Basically, the buying power of the currency erodes, okay? And they can no longer buy as many items as they would used to be in the past with that fixed amount of money, okay? So try not to think of it in terms of good or bad, that kind of thing, okay? Try to think of what impact it has on the currency. Okay, anyway, after all, we are all traders, right? We would like to know how economic indicators will impact currency's movements, okay? Which is why if you guys have any questions on fundamentals related issues, put them in the Traders Club EcoFin platform, okay? And then during the Mondays and Wednesdays evening calls, which is only for Traders Club members, okay, I will be giving you guys examples and covering, through the relationship between economic indicators and the respective currencies, okay? Just like what I did yesterday for the relationship between currency and inflation, okay? So if you guys did not join the call yesterday, please refer back to the recorded call, okay, for the explanation, okay? So overall, okay, we are seeing, I would say, a pretty good I would say tone, okay, pretty hawkish tone coming in from the Bank of Japan, okay, because remember, if they were to expect inflation to be the positive realm, okay, and right now, numerically speaking, okay, they have already revised upwards, okay, the inflation expectation, okay, the projected inflation. That means, okay, it's still quite a distance away from the central bank's 2% targets, okay, for inflation, but nonetheless, we are still moving towards it, okay? And as we move closer towards it, the higher the chance of, Bank of Japan increasing interest rates, which we haven't been seeing it since I don't know how long ago, like, way before I started trading, okay? So right now, I'm just going to show you guys the, the inflation data, which is over here, okay? The Japanese National Core CPI year over year, okay? Why is it that the whole, staying in positive realm for inflation is so big deal? Because when the pandemic hit back in, when COVID was announced, a global pandemic back in March 2020, okay, inflation just goes down, 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 gets lower and lower into the negative realm, okay, and it stays there for pretty much the whole of 2020, okay, and then it starts recovering back up again, and then come back down again, and then in recent months, okay, if I pass 2 to 3 months, okay, it starts to come back up to zero, and then right now it's like expecting to be at around 0.5 or 0.6, okay, because the Japanese data will be released this Friday, which is tomorrow, okay. So you can see over here, previous data release was 0.5% on a yearly basis, and then it's expected to rise to 0.6%, okay, which is really, really a good thing, I would say, okay, as well, of course, comparing with other countries like US or UK, whereby inflation is like hitting 40-year high, 30-year high for the UK, 40-year high for the US, okay, this is considered nothing. But, okay, coming out from the negative realm, which is also known as deflation level, okay, is actually a good progress for Japan. All right. So with that, okay, I would like to pause for a moment to see if there's any questions on Bank of Japan monetary policy. No questions. Okay, very good. So with that, I will head over to the trade ideas. All right. Normally, before I head over to trade ideas, okay, I would like to go through the calendar, okay, to see if there's any news pertaining to the currency of the day. In this case, the Japanese yen. All right. So we can see that, on Tuesday, monetary policy report, decision, and then on Friday, this is what we want to pay attention to, okay, which is the core CPI data. All right. When the Bank of Japan actually announced the monetary policy decision, okay, when the report, okay, the outlook report was being released, okay, saying that the central bank is actually expecting inflation to rise, okay, in the near term, 2022 and 2023, the Japanese yen actually depreciated, okay, actually weakens, okay. So like how I explained to the club members yesterday, all right, it is likely due to the case that, you know, when inflation rises, okay, it kind of erodes the buying power of the currency, okay. So if inflation is expected to increase in the near term, okay, then, you know, that actually did cause a negative impact on the Japanese yen, okay, when the report was released, okay. So this time around, inflation is expected to increase. This is the real data, okay. If we were to see something like a 0.6 or 0.7, okay, a higher than or as expected data, okay, coming in from the national core CPI year on year, okay, then we may be seeing movements in the Japanese yen, okay. The Japanese yen may very well weaken further, okay, because this data will sort of like, you know, verify that the Bank of Japan's, you know, expectation is true, okay, projection runs true, all right. Well, for this month at least, okay. So pay attention to it, 7:30 GMT plus 8. Likely there's going to be movements in the Japanese yen pairs, okay, pairs pertaining to Japanese yen, okay. Normally, we don't see much of a movements when it comes to Japanese economic indicators, be it the GDP, CPI, or, you know, can be monetary policy related, interest rates as well, okay. Because as we know, inflation is running low in Japan has been running low in Japan for I don't know how long, how many years already, okay. So it becomes like a default thing that, you know, the market is waiting for, you know, which is the inflation to actually come back up to positive realm and maybe starts increasing before we actually discuss, you know, how will GDPs and, you know, how will interest rates hike projections have an impact on the Japanese yen, okay. So this is something that you want to pay attention to. And then next Monday on the 24th, there's this Japanese flash PMI, manufacturing PMI, which I personally don't think there's going to be a big impact on the Japanese yen, okay. If it's the Eurozone, actually, you know what? I should just actually filter out the Euro, Pound, and Dollar as well, because, you know, when we trade currencies, we don't just look at one currency, we look at two currencies, okay? So we can just browse through, okay, for Euro and the, what do you call it, UK, all right? I've already covered the, what do you call it, the economic indicators to be released, or maybe any upcoming news and things like that, okay? But for the dollar, okay, pay attention that next Monday, there is the flash manufacturing and services PMI data release, okay? This may actually cause some movements in the US dollar, and it will be released at 2245 GMT plus 8, okay, next Monday. So gotta pay attention to it, because yeah, dollar yen will be a good pair to trade, I would say. All right. And then moving down to Tuesday, Wednesday, Thursday, FOMC. Okay. I will be giving you guys a coverage on what to look for, okay, on Wednesday's currency call. Maybe Tuesday currency call will be better, okay? Maybe Tuesday currency call, just to give you guys more time to prep for it, all right? And then on Wednesday, during the Wednesday evening call for Traders Club members only, okay, I'll probably talk a bit more about the FOMC, because, well, it's probably going to be like just 6 hours away or 7 hours away from the meeting, all right? And then there's the advanced GDP, okay, data released on Thursday as well, okay, on 21:30 GMT plus 8. And advanced GDP is actually the first release of US GDP, US quarterly GDP data, all right? Then the second one is the preliminary, and then the final one is the final GDP release, okay? The advanced GDP release tends to have more impact when it comes to price movements, okay? So do pay attention to it as well, all right? So that's pretty much it for the economic calendar, okay, for USD. If you guys want to, you know more about the Euro and UK economic calendar and things like that, yeah, refer to the Wednesday and Tuesday's currency call, okay? So moving over to the charts, let me just start off with dollar yen, okay? This is the daily time frame that you're looking at, all right? At the moment, it seems like the resistance zone of 115 has been, well, rejected, okay? Price has pretty much rejected the resistance zone, and it's actually at the moment, I would say, well, early on today, okay, let's just hit over to H4, 4 hours time frame. All right. Early on today, okay, just probably like a couple of hours ago, okay, dollar yen actually come close to the key level of 114, okay, and well, I would say it actually failed to break below the 114 level, okay, which is why it actually has this this long lower wick, lower shadow, okay, indicating that it actually bounced off the 114 level. So at the moment, okay, I would still be looking for selling opportunities, okay, because well, because there's just too much going on around the world, okay. We have the Russia-Ukraine tension going on, and the US, well, will definitely be involved in it as well, okay. Political turmoil, okay, and then there's this whole UAE getting attacked by missiles and drones and things like that. That is another uncertainty, okay, and then ongoing Omicron uncertainty as well, okay. So market is going to be like running all over the place, okay. So just another reminder, keep your trade short term, okay. So with that, I will still be expecting the US dollar to be, well, to weaken against the Japanese yen, okay. This is just against the Japanese yen, right? Because we all know although US dollar and Japanese yen, they are both safe haven currencies, okay. But personally, I feel that the Japanese yen is the safest currency among the three safe haven currencies, okay, the US dollar, the Japanese yen, and the Switzerland francs, okay. So I'm still looking for selling opportunities for the dollar yen, okay, specifically at this level 113.8, only after it breaks below the 114, okay. Tested once, failed to break below, okay. Will it break again? We have to wait for the next market open, which is probably at 1600 hours, okay, the European market open. All right, and then my stop loss would be at 114.1. You guys may be wondering why not above the resistance zone of 115, okay. Well, like I've said, I would like to keep my trades short term, and if I were to put my stop loss above 115, likely okay, my risk reward is probably going to be very bad, okay. It's probably going to be like I'm risking 1.2 for one, okay, which is a big no-no. All right, and then long-term trade is not what I'm looking for right now, okay. So stop loss at 114.1, just above this key level would be fine for me, okay. And then my potential take profit level would be at 113.2, okay, 113.2. Keep in mind that this is just a potential take profit level, okay. Do you have to wait for your trade to hit 113.2? No, okay. In a scenario whereby, like I said, with all this whole thing going on, dollar yen may very well weaken right now, okay, and may actually strengthen the next moment. And of course, keep in mind, next week, there's the FOMC, okay. The thing is that, whenever the dates kind of like gets closer and closer towards all these monetary policy decision, and we are expecting something to take place during the meeting, okay, there tends to be many speculations, on the street, Wall Street, Main Street, okay. So with all these speculations coming in, Goldman Sachs expecting 4 to 5 rate hikes this year. There's been speculation that the Fed may actually speed up QE tapering, okay. Instead of 30, they may very well just end the whole QE this time around, or maybe increase it to 60 billion per month, that kind of figures, okay. There tends to be pricing in taking place, okay. And with pricing in, be it good for the US dollar or bad for the US dollar, we will be seeing movements, okay. In a case whereby it's in favor of this trade idea, okay, which is a weakening of the US dollar, okay, and in a scenario whereby you guys are using other indicators to tell you guys to leave the trade for whatever profits you guys are making, do so, feel free to do so, okay, because the next moment another news may actually bump the US dollar up, okay. So this is just a potential profit, okay. So the stop loss will be at 30 pips and the take profit will be at 60 pips. So it's a 1:2 risk reward ratio, okay. So that is for dollar yen. Let me just move to the next pair, which is euro yen. Similarly, for the euro yen, I'll be looking for selling opportunities. On a daily time frame, we see that this previous support of 130.6 has already been broken, okay, strongly broken, okay. And then right now it has also broken below the 130 key level, okay? Likely it's going to stay below 130 for the time being, okay, with so much uncertainty going on, around the world and things like that. Monetary policy tends to take a step back right now, okay? Yes, I know that the ECB will be ending its PEPP program in March, okay, and then they will be adjusting APP up a bit before toning it back down during the fourth quarter of 2022. But, that is pretty much, I would say, stale news as compared to what's going on around the world right now, political turmoil, okay? And because of that, we are likely going to see euro weaken against the Japanese yen, the safe haven Japanese yen, okay? So likely it's going to stay below 130 at the moment, okay? So selling opportunities will be at 129.8, 129.8, which is around here. Then you guys may be wondering, wait, the price at the moment is already trading below 129.8. How do I actually sell? Okay, so this is what I'm gonna do. Okay, I will be waiting for a retracement of the euro yen, okay, all the way up to 130, okay? It's a short line over there, okay? But yeah, so at the moment, we can see on the H4 time frame, it actually is moving slowly upwards, okay, towards the 130 level. Like I said, okay, I am expecting euro yen to trade below 130 for the time being. So if it actually move upwards towards 130, okay, I'm expecting a downward bounce, okay, a bounce downwards from the 130 level. And only then, okay, I'll be looking for a selling opportunities at 129.8. Okay, so for you guys out there, you guys may be doing pending orders and things like that. Then in this case, it will be a sell limit. Okay, a sell limit at 129.8. Okay, and then once it hit that level, once it bounced down, okay, from 130 and hit my entry level, my stop loss level would be at let me just get the figure correct, 130.9 over here, okay, which is pretty wide, I would say, 110 pips, okay. I'm going to give you guys an alternative, okay. If you guys should be keeping this trade short term, okay, 130.2 would be a very safe level, okay. 130.2 will be a very safe level for your stop loss, okay. So if it's 130.2, that will be a 40 pips stop loss, okay. And then the potential take profit, be it the longer term trade or the short term trade, would be at 128.3, which is here. So it's 150 pips, okay. If it's a short term trade, 40 pips stop loss, 150 pips TP, this is pretty much close to 1:4 risk reward ratio, okay. And if it's a longer term trade that you guys are more interested in taking up, okay, stop loss will be 110 pips at the 130.9 level, and then TP 150 pips. Pretty much, I would say close to a 1:1.5 risk reward, okay. But to be honest, I would rather you guys take up the shorter term trade, okay. Risk reward is good, and just you never know what's going to happen to euro yen at the next moment, okay. But please wait for euro yen to retrace back to 130, okay, and make sure that it fails to break above, okay, hence coming back down again, then look for selling opportunities. All right, so that's for euro yen. Now let's look at the last pair, yen pairs. Pound yen. On a daily time frame, okay, we see that I would say, okay, that the pound yen has already broken below, okay, the support of 115.9, okay. It's a bit, I would say, at the moment, okay, it may very well be a false break, okay, a false break meaning it comes close to breaking the support level, okay, or resistance level, but then, the next moment it actually bounced back up, okay, and then price just moved in the direction for the next, for the next few days and things like that. Hence, it sort of like cheated our feelings, okay? So it's like a false break kind of thing, right? So at the moment, I would say, okay, look, whether or not it actually broken the support level, it doesn't really matter in this case. Why? Because my entry, okay, I'll be looking for selling opportunities, okay. If it's not broken yet, all right, we will have to wait for it to break. If it has already broken, okay, I would still be waiting for a lower level, okay, for pound yen to trade at the lower level before looking for selling opportunities, okay. So either way, don't be bogged down by whether or not this is a false break or what, okay. If you guys are interested in selling pound yen, okay, the level will be at 155.3, okay, and you can see that it's actually below this what do you call it? This recent level, and by the time it hits 155.3, it is definitely, well, I would say it's definitely, I'll be convinced, okay, I'll be convinced personally that, you know, pound yen has already broken the support of 115.9. Okay, so 115.3 will be the entry for sell, okay, and then my stop loss level would be at 156.3, which is above my resistance, then resistance of 155.9, okay, which is a 100 pips stop loss, okay, very wide, pretty wide, I would say, all right. Then the potential take profit level will be at 153.3, which is a 200 pips potential profit, okay. At the moment, I would say that's the best I can do right now, okay, for pound yen. In terms of entry point, okay, the most aggressive I can go is probably 155.3, okay. And keep in mind, all right, that this 155 level is just 30 pips away from the entry level, okay. I'll just mark it as red, all right, over here. So, you know, in case this trade idea were to get triggered later on, okay, 155.3, I will pay attention to how it reacts to 155. In a scenario whereby it actually slows down when it's close to 155, this key level of 155, then, you know what, I would rather just close my trade for, you know, whatever 20 over 30 pips profit that I have at that time, all right? So, yeah, in case it doesn't break below 155 for whatever reason, okay? And there's of course this Bank of England coming in, I think next month. But the thing is, you know, recent UK inflation, I think was released yesterday, okay, has hit a 40-year high level. So, you know, that will definitely pressure the Bank of England to actually hike interest rate more, okay, or maybe more aggressively, okay? So a February rate hike is something that we can actually look forward to. It's pretty much, I would say, a fair game, okay, with this ever rising inflation in the UK, okay. So with that, all right, that's the final pair of trade idea. Do you guys have any questions, all right, on, you know, BOJ, on trade ideas and things like that? Okay, so if there's no questions, all right, Traders Club members, if you guys have any questions later on or something like that, just put it in the EcoFin chat, and, you know, I'll get back to you shortly, all right? If not, let's just carry our discussion over to the EcoFin platform, all right? And then I will see you guys tomorrow, same time, for the currency call, all right? Take care for now, bye-bye.